Hi, I'm Michael Joyce from Agili, and I'm pleased to share with you our thoughts and viewpoints for the summer of 2019. I always love our summer video because I get to wear my drip seersucker jacket. So for the first 6 months of 2019, it's been very good for investment returns. Every asset class is up, but still there are some concerns out there, and the economy is showing some signs of slowing in some cases, but is still overall pretty strong. And some of the slowing indicators are coming from some of the waning impacts of the tax law that was passed in December of 2017. But probably more of it has to do with the impacts of the trade wars and the tariffs. Now, so far, they haven't taken a big bite out of the economy. There's been a lot of forward momentum in particularly the service economy. But the concern that we have is that the longer this goes on, the more of a chance it is going to take a bite out of economic growth and take a bite out of corporate profits. So we think that, at least for the foreseeable future, the markets are going to trade in a fairly narrow range. So the markets would love to have a trade deal with China. And they don't know when that's going to occur. They don't know whether it will occur in 2 weeks, and they don't know if it will occur in 2 months, or whether it will be longer. And there's a fear in the market of missing out, because whenever there is a trade deal, even if it's a bad deal, even if it's a deal that just takes us back to where we were before the trade war started, the markets are going to like that, and they're going to go up. On the other hand, the markets don't want to stick their neck out too much, because they do know that the longer these trade wars go on, the greater the potential is for a negative impact on economic growth. So, not to sound like a broken record, but we're still kind of in the same place. I mean, we still think that, the economic cycle that we're in is getting a little bit old, but we're not yet have a recession right on our doorstep. There's not a bear market right around the corner. But as we've been saying recently, it is a good time to be maybe a little bit more cautious, to take some profits off the table for some things that have really gone up. And it's also important to note that the stock market gains this year have not been universal. There's been a big dichotomy between growth stocks like technology stocks and value-oriented stocks, which really haven't recovered as much. And some of them are actually pretty decent deals at this point in time. The markets are also thinking that the Fed is going to backstop them. They're very optimistic that the Fed will lower interest rates at the first sign of economic distress caused by the trade wars. And in fact, Fed funds futures are projecting 3 interest rate cuts in the next 12 months. And we're worried that the market is too reliant on the Fed in that case. I mean, the Fed has now raised, over the past couple of years, they've raised short-term interest rates to about the level of inflation, which is where it should be in normal times. And to be clear, if there is a decline in core inflation below the Fed's target of 2%, they will lower rates. But to think that they're going to do it 3 times in the next 12 months might be a little bit optimistic. I mean, that would certainly imply that core inflation has dropped a lot. And if core inflation drops a lot, that probably means that economic growth has slowed very significantly, which really wouldn't be a good thing for stocks either. So, having passed mid-year, it's also a good time to look at some financial planning issues. And one of the things to look at is your taxes. Now, I know nobody really wants to think about taxes right now because, we just had April 15th a couple of months ago, and some people still haven't filed their taxes if they have it out on extension. But what's important now, you may recall that last year, after we got into the new tax law, that tax withholding tables were changed. So it is a good time to contact your financial strategist at Agili and just look at your tax withholdings and your quarterly estimated payments if you make those. And there's a lot of time to adjust that right now. This is also a good time of year to look at estate planning. Now, you may also recall that another feature of the new tax law was that the federal estate tax credit was doubled to $11.4 million per person. So if a married couple therefore can exempt $22.8 million of their estate from federal estate taxes. So not many people are actually subject to federal estate taxes. Not many people have an estate of over $22.8 million. But it is still very important to review your estate planning, your estate documents every year. And the reason for that is you want to make sure that they say what you want them to say, that the money is going to go to the people that you want it to go to should you pass away, and also the people that are acting as part of the estate documents, or the people that you want doing that. Every year we run across situations where somebody says, oh, I don't want that person to be my successor executor anymore because they've moved out of the country, or they're now 78 years old, or something. It's easy to fix that. It's also important to make sure that your estate is set up correctly and look at things like beneficiary designations on IRAs and 401k plans, as well as life insurance policies, because those are things that aren't governed by wills or trusts. So this is also something that your financial strategist at Agili would be very happy to help with and take another comprehensive look at your estate plan. So this is something I think that everybody should reach out to their financial strategist at Agili, because after all, this financial stuff is our jam. So I've been very happy to share with you our thoughts and viewpoints for the summer of 2019. If you want additional information on our thoughts and viewpoints, please visit our website, agilipersonalcfo.com, or follow us on Twitter. Thanks a lot and have a great day.